Pensions Level 1 can be a great way to save money for your retirement. But should you get them? Or do you have one of them already? Maybe without even knowing it. If so, what are advantages and disadvantages of this pension level? And how much does the government take in taxes? Stay tuned to get all the answers.
Perfinex, Personal Finance for Expats.
What's up everyone? Welcome to a new pension video from Perfinex. Today with Pensions Level 1. We get a lot of messages from expats asking which German pension is the best. It depends. That's why we have this little series, Perfin explaining the German pension levels and the different pensions inside these levels. So you have a complete picture with pros, cons, taxes, in contribution and in payout phase, so you can find a pension that's right for you. Just as an example, Pensions Level 1 might be right for today's 3 out of the 9 typical expat scenarios we thought of. But before we come to the scenarios, let's remind ourselves, just very quickly, how the German pension system is built. Pensions Level 1 are basic pensions in today's video. Pensions Level 2 are private pensions with some form of government benefit. We'll take a look at these next week. And Level 3 are all other kinds of private pensions that offer other benefits like flexibility, you can use it as collateral for real estate, whatever. We'll see 2 weeks from now. Alright, let's come to the different pensions inside Pension Level 1. We got 2. The public pension, that you probably know already, and the base pension. They're very similar. Everyone can get them. They will pay a monthly pension until you pass away. There's just one difference between the two, and it's a big one. Public pension is a generational contract, meaning you are not saving for yourself. You are funding the public pensions of the current retirees, and the upcoming generations will fund your public pension. So the money you pay into the pension system through your payslip gets paid out immediately. If you want to know how much you're paying in, check these 2 videos, Perfin explaining the German payslip and the German social security system. And if money is paid out immediately, there's no growth happening, no rate of return, no capital gains. The power of compounding interest doesn't work here at all, which is a huge pity and the reason why the German public pension is running out of money big time. That's why the government is supporting the public pension with tax money. Last year the government put in about 110 billion euro of our tax money, about 5 billion euro more year over year. That's not sustainable, is it? Public pension support is the biggest expense of our government, by the way, by a long mile. Almost 3 times as much as we spend for national defense. If you want to know how much you're getting from the public pension when you retire, check this video that Perfin explains the Renteninformation, the letter the public pension sends you every year. The base pension, on the other half, is the private version of the public pension. Basically, public pension on steroids. Why? Because all the savings you put into your base pensions are your savings. They are not shared with anyone. Let's say you're 27 right now and save for retirement with 67. That's 40 years of compounding interest your base pension is accumulating, and the public pension is missing out completely. And that brings us to the first advantage of the base pension level 1. It allows you to invest your money in ETFs and mutual funds. You can also get a base pension that does not invest at all and just returns a given interest rate. But you know as well as I do that interest rates are near zero. So use this advantage and choose an insurance company with a big portfolio of ETFs and mutual funds to choose from. Also, choose an insurance company that allows you to switch investments, which costs no fees and no taxes inside your pension one, unlike a brokerage account. And it's very unlikely that you want to keep the same ETFs and mutual funds over decades, right? And even if, at least you have the freedom to switch. And the real advantage of your base pension over brokerage accounts is that your base pension will never ever run out of money. Your brokerage account can be empty if you didn't save enough. And if your financial strategy is built on super cheap ETFs with low-cost brokers, good for you. But if it's empty, how do you pay for food, housing and health insurance? And with the public pension or the base pension, if you live longer than expected, which I wish all of you watching, it's a problem of the insurance company or the government. They have to pay you a monthly pension until you pass away. And that brings us to advantage number 2. You don't have to take care of your money. Over the years, I talked to a lot of people who don't want to take care of their finances, who don't know how to take care of their money, or people that simply don't want to spend their time managing their money. And that's completely fine. If you're like this too, just get a base pension. Before 67, your employer paid you every month, and after 67, the public pension and the base pension will pay you every month. You don't have to do anything, and the base pension will pay you worldwide. Whatever you saved up will be used to pay you a monthly pension, no matter where you are in this world. Unlike the public pension, that might decrease your pension if you spend your retirement not in Germany. And it's not just your monthly pension that is secured, it's also your savings. No matter what happens in your life, your savings inside your base pension are safe from seizure. If you do not have a private liability, for example, and cause a big damage, you have to use all your savings until that claim is settled. All savings except your base pension, that one's safe. By the way, a private liability insurance is one of the 3 must-have insurances in Germany. Check the link in the description to see the video. And the last advantage is a big one. This year, up to 23,724 euro are tax deductible for retirement contribution. And this number will rise steadily until it is 25,787 euro in 2025. Let's make an example. If you contribute the maximum of 23,724 euro for retirement, which will be a lot, with a marginal income tax rate of 42%, you would get back 9,964 euro from Finanzamt when you file your tax declaration. Woo! You want to know more about income tax in Germany? Check this video. You want to know other tips to increase your net income and save taxes? Check these 2 videos. All links are in the description. Wherever there's light, there's also shadow. So of course, there have to be disadvantages of a base pension. I just told you that your contributions are tax deductible, right? So if you save taxes in contribution, you have to pay taxes in payout. You didn't think Finanzamt would let you go, did you? The idea here is that you have during your working life an average income tax rate of, let's say, 30%, and during your retirement an average income tax rate of, let's say, 20%. You would save some taxes there, and also because your investments grew tax-free over the decades. But still, the German government wants its share at some point. Disadvantage 2 is that you cannot withdraw any money from your base pension. Money you invested once stays in your base pension. And that's why you should never ever put all your savings into a base pension. Even if you think now, yeah, I really like this base pension thingy. That's not what this financial product is made for. And since nobody can withdraw, you cannot use your base pension as collateral to purchase real estate. A Riester pension level 2 can be used to buy a home, and private pensions level 3 either for a home or a real estate investment. Not possible with a base pension. That's just not what this financial product is for. Also, you cannot terminate your base pension, unlike pensions level 2 and 3. But with pensions level 2 and 3, you don't get the huge tax deductions like you do in a base pension. Money invested in your base pension will stay in your base pension. I think I said this enough times now. Of course, you can stop paying into your base pension at any time. Nobody will force you to contribute, but your money will stay there. In fact, if you stop contributing, your investments inside your base pension will continue to grow tax-free until you retire and then you'll get a monthly pension until you pass away. Disadvantage 5 is that some of the insurance companies that offer a base pension are really There's no other way to put it. In theory, you can change the insurance company. It's supposed to be possible, but I've never seen it in reality. So pay attention that you choose an insurance company with low costs. Everything above 1% or 1.5% per year is a ripoff. Choose an insurance company with a big investment portfolio. Nothing's worse than if the insurance only offers bad investment opportunities. Because remember, the amount you saved up will determine your monthly pension in retirement. So your rate of return matters the most. And choose a financially stable insurance company. If you're 37 now, you have to contribute 30 years. And then you hopefully live another 30 years. So we're talking about 60 years to go. The insurance company should have the financial power to pay that long. As you can see with these disadvantages, a base pension definitely lacks flexibility. So if this is important to you, then a base pension is simply not the right financial product for you. Because let's be honest here, a base pension is not a generally bad pension. Maybe it just doesn't suit your life. And this is where I believe that most of the problems, disadvantages, downsides, whatever, are coming from. I have a base pension myself, and if that doesn't show you that I truly believe a base pension is a good financial product, I don't know what does. But you should have some planability in your life. And you should really think this through before you get a base pension. If you want us to talk about it together and find the right insurance company for you, send us a message on WhatsApp or secure a free meeting right here. Alright, now you know the advantages and disadvantages of the base pension. You might have an idea of who should get it. Scenario 1 are high earners above 60k gross salary for singles or 120k gross salary for married couples. Why? Because they're in the highest tax bracket and they pay a marginal income tax rate of 42%. Remember that there's the link to the income tax in Germany video in the description, just in case you want to know how your income is taxed. If you earn 60k gross and save money in your base pension, you will get 42 cents back for every euro you invest in your base pension. That's pretty good, isn't it? And the more you earn, the higher your benefit. If you don't earn 60k gross salary yet, don't worry and tune in next week. At least the pension level 2 may be better for you. Scenario 2 is people who want to save taxes while protecting their ability to work with a disability income insurance.
But Axel, what's a disability income insurance?
A disability income insurance is one of the 3 must-have insurances in Germany. If you want to know what it is, and if you should get one, check the link in the description. If you combine your base pension with disability income insurance, at least 50-50, your whole premium will become tax deductible. That's the upside. On the downside, and you know this by now, if something is tax deductible in contribution phase, what happens in payout? It's taxed, of course. You're absolutely right. So when you have a disability pension of 2,000 euro every month, you have to pay taxes on that pension. Meaning you have to insure a little higher disability pension compared to a disability income insurance without a base pension combined. Scenario 3 are self-employed people or business owners. Of course you can pay into public pension voluntarily if you want to, but you can also burn your money or throw it out of the window, or at least donate it to a good cause. Just remember the beginning of this video and the major difference between the public pension and the base pension. Public pension is a generational contract. No savings, no rate of return, no compounding interest. Everything you save into your base pension is your money and your money alone. You save your own money, you get your own money. And trust me, you can manage your money a whole lot better than the German government or the public pension. And you can choose freely how much or how little you want to invest in your base pension. You can also make one-time transfers. These are 3 perfect scenarios of people who might want to get a base pension level 1. If you do not fit in these scenarios but like a base pension, you can still get one, of course. Just remember that a lot of the downsides come from people not knowing what they're doing. Some financial products can be done in a couple of clicks, but certainly not this one. Remember, earlier we talked about 60 years of financial planning. If you want us to help you through the process, feel free to reach out. We will also tell you if we think that a base pension is not the right pension for you. Because there are a lot of other pensions in the German pension buffet. This was just pension level 1. Next week we will continue with pensions level 2 and pensions level 3 the week after that. Take care, everybody.